Hello, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, well, the S&P and the Qs tumbling a little bit after NVIDIA's earnings dragged down a lot of the semiconductor stocks. But we did cover NVIDIA's earnings on the channel yesterday, and we said they had fantastic earnings, but we would not be surprised if the price flutters a little bit, as that's been a common theme over the course of these Q4 earnings releases. Now, it provided a very nice opportunity for a lot of semiconductor names in the sector to cool down from previously extended levels. So whether you think that NVIDIA had bad earnings or whether you're of the opinion that maybe dealers were just unwinding hedges because of the good old $200 call wall, well, suffice to say that the reasons don't really matter. The takeaway from yesterday's earnings were simply the fact that the ecosystem surrounding NVIDIA was going to be very strong for years to come, and that there are many trade opportunities to come from NVIDIA's earnings yesterday, namely in a lot of the bottleneck sectors, whether it's energy, whether it's memory, whether it's copper, whether it's fiber optic cables, and everything that goes inside the data center. What was true of yesterday's NVIDIA earnings was that there was going to be so much money still on the table for the AI trade at least through 2029 and 2030. And as such, we should still be researching very interesting AI or AI related positions nowadays. So in today's video, got to keep this one a little bit short as I do have to check out of the hotel very soon and change cities once again. So number one, we'll be going over the S&P, the Qs, and our major technical analysis on our major market indexes. After that, we're going to come down here and take a look at our big tech names, because today, big tech was a little bit mixed. NVIDIA dropping and AMD dropping as well. A lot of semiconductors did drop, but you had some big divergence between semiconductors and software. Software actually performing quite well today. As a result, big tech remained largely mixed and did bring down the S&P and the Qs, but broadly speaking, the market was healthy. So we'll take a look at these names and once again, pick our favorites for either trades or long-term investments. And at the very end of the video, if we have some time, I will once again run through the list of biggest gainers and losers of the day, of which, as always, there were many. As we know, the volatility has been very high in these markets most recently. So we'll take a look at some of these names on the lows and then take a look at some of these names on the highs and derive which of them could be very interesting swing trade opportunities or long-term investment opportunities too. So with that out of the way, let's get right into the video, shall we? So in terms of your daily performance here, guys, obviously the SPY is down about 0.5%. The Qs are down 1.21, but look at your equal weighted RSP, right? Equal weighted SPY. The market breadth still does remain quite healthy. If you take a look down here at the percentage of stocks above their 20-day EMA, still at a very healthy print of about 55% of all stocks above that. The percentage of stocks above their 50-day EMA, your medium-term moving average, which the institutions look at a lot in terms of determining whether or not the market is in bullish or bearish conditions right now. 57, that's above your 50, which is the line in the sand to determine bearish or bullish lean. Lastly but not least, percentage of stocks above their 200-day EMA, the longest dated moving average, does show the market is, broadly speaking, very healthy right now at about 60%. So the market rotation and the market breadth right now is still healthy overall. Moving on to the heat map, you will see that most of the damage today was done by NVIDIA, and consequently other semiconductor plays that did come down. But you'll notice a common theme here, right? It was all the data center infrastructure themes that took advantage of NVIDIA's decline to kind of cool off a little bit. And some names include Broadcom, Micron, AMD, Intel down a little bit. But a lot of these semiconductor equipment manufacturers, right? Teradyne, KLAC, LRCX, you'll notice if you just run through this list, right? They were very, very, very extended. So a little day of pullback is not going to hurt anybody. AMAT, LRCX, even ASML, which is not in the S&P 500, right? Very extended. Micron also took advantage of a day like today to consolidate a tiny little bit. SanDisk throughout the good part of the morning, also consolidating a little bit. So semiconductor equipment manufacturers and some of the names that ran super hot into today took advantage of today to pull back a little bit. And the same can be said about other plays associated with data centers, such as Caterpillar was down, even though most of industrials were up today. Utilities, some of the ones closely associated with data center trade as well. NextEra Energy, that was down despite utilities having a good print overall in the index. So you can see, guys, right, a lot of the data center trades, even here, some of the electronic components Amphenol, GLW, right? So all of these, right, you just look at the charts and you're like, yeah, they probably will take advantage of today to kind of have a little bit of a pullback. It doesn't mean that anything's wrong with the trade. It's just a little bit of a cool down factor right now. The rest of the market was doing very well. Financials continues to be one of the big three that is leading higher. So obviously when you talk about big three, it is technology, financials, and healthcare. You always need 1 out of 3 to participate if you don't want to see really big declines on the S&P. But today, was a bit of a show put on by probably the algos. Once again, NVIDIA probably does not deserve to be down, about 5.5% right now. You can see that most of the volume, most of the volatility, true to algo fashion, was brought in very early this morning. And then when the real trading actually kicked off, NVIDIA was able to stabilize right around their support level 2. So that being said, taking a look at the one-day relative, guys, you'll see our market mix a little bit better here. Financials, real estate, industrials, materials, and energy leading the way higher. To the downside, some of the minor sectors not losing too much, but obviously technology being heavily weighted, and semiconductors right now was a bit down. And you also had several of your big tech names such as Amazon, Tesla, and Google following suit. So it just was not enough to keep up the markets. However, on a 1-week relative basis, even with today, well, most of your market segments are indeed higher, led by materials, utilities, communication services, real estate, and defensives. The reason that I chuckle is because these sectors have just been performing so well all year so far, healthcare being the only one that was notably down. Now, before we get into the charts, I have a few key pieces of news that could be interesting to our analysis today. Number one, Netflix. Netflix declines to raise the offer for Warner Brothers, and as a result, ditching the actual deal. Now, after they released that piece of news, the stock is currently up about 8 to 9% in the after hours. Just goes to show you how much pressure that deal was putting on the stock price, which was very obvious, right? Not only in hindsight, but the entire way through the drop. And you might remember me saying that prior to positioning, we were waiting for the daily uptrend switch, which we got the other day. And as a result, since the Netflix provided Paramount with a 7-day window, we were saying this could be a nice little trading low here and take advantage of this opportunity to build some further swing trade positions in Netflix or accumulate some last shares if we wanted to as an attempt, right, to set a stop loss down here and go for the thesis that possibly Netflix was going to back out of the deal and collect a very juicy $2.8 billion break-free fee. That being said, the stock should be opening in mid-90s tomorrow, so congratulations to all of you that were able to pick up Netflix in the 80s and 70s for a decent amount of time, right? Moving on further here, only one statistic that I will show you guys today since we don't have that much time. This is indeed incredible. And we've been talking about this for a while. The 3-month risk-adjusted momentum factor between the S&P 500 cap-weighted and equal-weighted is down to minus 0.60, the lowest since the 2000 dot-com bubble burst. In simple terms, this means that large caps delivered the weakest volatility-adjusted performance compared to the average stock in 25 years. This marks a sharp reversal from the 0.60 reading in November when large caps were leading the market. Look at this massive switch here from large caps leading the market. I mean, let's be honest, large caps have led the market a lot of times in recent memory, especially when the S&P has been close to all-time highs, but not this time. This has been a story all about the bottom half of the market, the smaller components of the market, and as a result, your RSP, as we've been noting since the start of the year, has been your true outperformer, right? Your equal-weighted SPY has been performing too well as large caps, by large and by far, not only the Mag 7, but take a look at this SCHG. This is just US large cap growth ETF. There's about 196 holdings in here. So quite frankly, it's not only the Mag 7, right? It's so many other large cap names like SPGI or Moody's Corporation or some of the big banks. XLF is still down year to date, or possibly, the credit cards and things of that nature. So a lot of the large cap companies, guys, just not being your market leaders right now. But even though we don't have the market leaders, it's nice to see so much participation from the smaller names in the index, right? A lot of those names, especially in value or in energy and things like that, have been largely muted for the past 2-3 years due to macro concerns and pricing power concerns with inflation. So nice to see the switch, even though large caps have been out of favor. It's not always going to stay that way. As you can see, this chart often does reverse at these points of time, so we might just be able to see large caps come back into favor. You'd be hard-pressed to believe that large caps would be out of favor for the entirety of 2026, of course. And last but not least, some pieces of news right here. Block, which had earnings today, Jack Dorsey's company, Square, called now Block, surges over 20% after announcing plans to cut over 40% of their workforce. Yes, good old Jack Dorsey posted I don't know if he sent an internal memo or if he just posted this on Twitter. I assume he sent an internal memo, but he's making the workforce smaller from 10,000 people to just under 6,000 people. That is 40% of the entire workforce. Now, for those of you that know the way that Jack Dorsey operates companies, he's not really very good at cost management. You only have to look so far as this very website that I'm showing you right now that Elon Musk took over, fired 90% of all employees, and yet the website is still running just as well as it once had, right? So Jack Dorsey has never truly been the shareholder-oriented CEO, and one could argue that maybe they just didn't even need 10,000 employees to run this company to begin with. Now, the reason that he states in this article is that they've been making advancements and implementations in AI over the most recent quarter, and that he was faced with a tough decision as in terms of should they do layoffs progressively one after the other or just do the Band-Aid rip? As he said, they chose to just do the Band-Aid rip. He said he didn't want to go through rounds of layoffs as it defeats company morale. But overall, I'll leave the conclusion to you guys, right? Twitter is a bit mixed on this one, and financial media is a bit mixed on it as well. Can they have really implemented such grandiose AI systems in the span of 2 months since all these agents have really been taking storm? Or was the organization bloated to begin with, and this is just kind of like a scapegoat to lean out the company? As we know that Block's share price has largely been bogged down because of their inability to drive cost efficiencies to the bottom line. It's kind of been stuck down here for the past 4 years, right? So those are the interesting pieces of news that I thought could maybe interest you guys today. Now, that being said, we're through that. Let's get right into our index analysis, and we won't spend too much time on that because I want to get to big tech and our biggest gainers and losers, since I'll try to keep this video as short as possible. So the S&P, even though it was a down day, you got a nice little gap fill here, and they did not close at the low of the day, retracing about half of today's early morning volatility. Now, the daily uptrend is still in motion, and we still do have the nice little support box right here, 685 to 678. No red flags would arise on this chart unless you lose those line in the sand lows and lose your newly established daily uptrend in the process. We are still in a very large chop zone with the S&P doing absolutely nothing. However, as we did say, the market breadth is very good and the rotation is still very interesting. Definitely a lot of opportunities on the table for everybody, but just pay attention to your short-term line in the sand levels. As of right now, the bulls still are in control, as we do still have a bullish leaning bias. The weeklies have not been lost. The monthly time frame has not been lost either. Moving on to the QQQs right now. Qs also holding up the daily uptrend. No flush of your most recent higher lows at about 598.56. They did fill the little gap, and they did not lose the support range that we're trying to reestablish, 613 at about 605. So we will see if the bulls are able to shake this one off into tomorrow, or if we once again start challenging our line in the sand levels and lose the newly established daily uptrend. Now, there's not many red flags on this chart. One could argue that the weekly time frame has broken down a little bit, and I would agree. However, the higher time frames do paint a more full picture in the fact that we are just looking for monthly higher lows. The worst that it could possibly get, as we were saying in the past few weeks during the big SaaS sell-off and whatnot, in my opinion, is probably a 8 to 9, maybe even 10% pullback, which would put you from the highs to the 12 EMA at about 8 to 10% drawdown on the QQQs, which is just a normal market correction when volatility gets a little bit high right now. But as of right now, the price action still anybody's game, right? On the SPY, it's a little bit more clean. On the Qs, if you're bullish, you really want to see them really clear this support level in a big fashion and put more space between us and the line in the sand levels. Moving on to XLF right now. XLF, glorious recovery, basically an engulfing move of your most recent leg of selling. Beautiful, guys. If you're a XLF bull, as I am right now, this is exactly the type of move that you want to see. It creates a lot of space off the lows that we can reset the daily uptrend to the upside and start attacking this 53 to 54.5 area of resistance. The weekly candle, if she closes like this tomorrow, is going to look very, very interesting, as we now have completely rejected our support zone. Bulls playing very good defense, and that was to be expected. We did highlight this area as one of our big areas of control. Prior resistance and current support acted really, really well here, and it was a really nice opportunity to go shopping for XLF or for individual XLF components, as we were highlighting recently, right? Many interesting sell-offs, both on Visa, on MasterCard after the Citrini article dropped on Monday, and obviously some of your other bigger players into the last few weeks, such as SPGI, which is now setting a beautiful daily uptrend off the lows, and Moody's Corporation as well. Down here was a beautiful buy. We highlighted it many times, and now they've recovered almost half of that big weekly move to the downside, right? So there were some nice opportunities, even some of the banks, also Bank of America. We were highlighting this back test of 50. It gave us 50. Hopefully you guys were able to play. And JP Morgan, we were also highlighting this little back test here into the mid 290s for a little bit of accumulation. Decent all across the board for financials. So we will see if they can continue to push higher and change these trends one after the other. Moving on to XLV Healthcare right now. Healthcare not moving too much, still getting bogged down by our range resistance highs. 160 down about 158 is the range that you want to see crack. Still in a bit of a bull flag formation right now. Obviously, big consolidation at the top, tightening up, right? Really hugging the top end of resistance. So when that usually happens, does translate to a little bit of a pop higher, especially when the bulls are already in control of the higher time frames, such as the monthly right now. One key name that you'll want to watch out for a breakout higher is going to be Eli Lilly. It's the strongest weight in that whole sector overall. So if you get the break above from Eli Lilly, fantastic. I still think there's a nice buying opportunity on Eli Lilly here for some swing trades here through the 900 swing lows, right? If they lose this range, it's fine. They're looking for the monthly higher lows into previous all-time high resistance. This would be a beautiful monthly breakout retest. Some of you guys on longer time frames would call it a gorgeous cup and handle as well. That could be a very interesting setup into the rest of 2026. Moving on to semiconductors, they got hit pretty badly today because of NVIDIA's earnings down, which did provide a nice cover window for a lot of consolidations, but I wouldn't deem there to be any big red flags to the semiconductor trade. If anything, NVIDIA just reiterated how strong the semiconductor trade and semiconductor equipment and everything that just makes the wafers or the wafers themselves, silicon, right, fiber optics, copper, so many energy, right, so many components to that trade overall. Not just semiconductors, it's the entire data center trade, right? Very solid move right there. Higher lows are still set at about 398. Until you crack that, no loss of the daily uptrend and no signs of larger weekly consolidation. But even if they do, coming probably right down here to the 12th weekly EMA, the bulls are still indeed in control. So just pay attention, guys. Some of these pullbacks will offer some very interesting opportunities. A few that I'm always keeping an eye on are going to be Broadcom down here in the lower 300s, though you have to mention that they have earnings next week. Marvell also down here, low 80s, down about mid 70s is very strong in terms of just this monthly pattern that the bulls have been building for a very long time right now, and some of the other plays in terms of some consolidations into some breakouts, right? Names like Micron, which are just making a nice range high at the tops right now, and even SanDisk, right? Beautiful consolidation, easy to set some tradable lows in here if you are going for the bigger legs of expansion. I know the chart is very stretched right now. This is literally for momentum traders that can place adequate stop losses, not really for anybody else, because a lot of these charts, guys, are very extended right now. You are literally just playing momentum follow through, so keep that in mind. Moving into IWM Russell, we highlighted the bull flag in the past few days and past few weeks. It is still playing a bit of a tightening up game right now. You'll want to see a break of this trend line right here, and also a break of your most recent highs, lower highs to be specific, 270, to get that big follow through, right? It looks really nice. Really nice tightening up of the bull flag right here, and the bias would be long. Why? Because we already control the weekly time frames, and we obviously control the monthly time frames as well. So keep that in mind, guys. The Russell is looking very nice for a breakout. In the event they give us the good old Uno reverse card and break the bull flag to the downside, you got a great level of re-entry here on the monthly time frame, which would be 250 to 245, hunting for those monthly higher lows. So the entire market right now doesn't look too bad, right? No red flags. There's just a lot of rotation right now. Market breadth is still good. You got a combination of growth stocks, but also value stocks, both performing, and large cap growth is still the one that remains a little bit of a laggard. But as we highlighted, this lagging effect obviously will not last forever, right? It's just a byproduct of extended rotation in the markets right now, so keep that in mind. Now, moving into something like the VIX actually spiked 15% at one point this morning at the peak of the NVIDIA / semiconductor sell-off, which is why you kind of knew it was a little bit fake in terms of the price action today across the NVIDIA trade. That being said, the VIX is still high, and I took advantage of it today to sell some more short put options, right? There were some phenomenal opportunities on NVIDIA. As I was saying in yesterday's video, pay attention. You get a big drop on NVIDIA after their earnings. Playing some short puts in this range with heightened volatility, very, very, very strong bets right there. And I also took a new little trade on New Holdings. New Holdings dropped a ton after their earnings, but they had really good earnings. So I'll be having a lot of fun playing this whole $15 down to about $13 range. Haven't talked about this one for a while because it was quite extended. There was really nothing to do up here. But now that they're giving us the infamous monthly backtest into this range while still presenting good earnings and strong company growth, I'll be playing this one too. So when the VIX is high, you just got to look for some opportunities, maybe on some of your favorite stocks. They may have pulled back to interesting levels. The volatility will be higher, and as a result, you'll get a lot more premium with a lot more distance on some of these strike prices, right? So keep that in mind. Moving on to gold. Gold also not doing too much, right? But the bullish long is still indeed intact. They're just looking for just the good old breakout retest, right, of this range resistance high, which we previously had at about 5,065, right? So the bullish longs are still heavily in motion right now. Stop loss would be down here. As we said, we were looking for entries in these areas and looking for the breakout higher. Now you would be carrying these longs into 5,600 swing trade tops, and then also these 6,000 psychological. So decent risk reward still on this trade to be had. The bulls control the daily, and they still are in control of your weekly timeframes here, even though there was that massive liquidation cycle. The gold long is still looking very good right now. Just trade with a stop loss because you know the timeframes are extended. Moving on to silver right now. Silver also same concept, right? We were looking for the silver swing trade, even though silver did not present the daily uptrend. This was just basically off of gold, right? So if you took the long on the daily uptrend break, that would have also triggered a silver long as well, which was about back here when they did it. So silver hadn't completed the pattern. It was just literally a sympathy trade from the pattern on gold. And now the daily uptrend is still expanding well. So if you do consolidate, you might expect us to come back down here into this little line that I can draw on the chart right now, which is these previous highs back there, this previous little guy right there, and all of your daily moving averages too. So call it the good old, 83 down to like $80 pocket. That is the area that you're looking for, the fallback area if they have to consolidate a little bit more before maybe going for a further leg of upside. So stops can be moved to break even, especially if you're in from back here, or you can execute with some trailing stops as well. But a silver trade is not looking the worst right now. Weekly is okay, and the monthly has recaptured a lot of the early February volatility. So we'll see this candle closes literally tomorrow. Moving on to our Bitcoin trade right now. So Bitcoin, not too bad, right? We know that there was some Jane Street news yesterday. They got caught with their hand in the bag again for like the 8th time since I've been trading the markets over the last 15 years. At this point in time, right, we know the HFT firms have a lot of very predatory trading activities, but what you'll be looking for here, since we got the engulfing move, guys, they have to convert this, right? You have to convert this engulfing move into a new daily uptrend if you really want to get some lift on these weekly time frame charts as well. So there is a tradable low right now since you do have an engulfing move, and they're looking to kind of change the pattern a little bit, trying to recapture your short-term 12 EMA in the process. And the tradable low right now is 62,200. If you're going long, that should be your stop loss. All the way up here should be your take profit target. That's for a swing trade. Bitcoin still very low, still around the 200 weekly EMA, weekly oversold, all that good stuff. So longer term positions, if you're bullish on crypto, now would not be a bad time to continue to DCA. Or if you're looking to swing trade, they just did present you with a tradable bottom. And at this current time, Ethereum as well, right? Getting very, very tight on the price action. And now, boom, you got the engulfing move. You are looking for either vertical follow through or the two-step daily uptrend recovery process as well. Tradable low right now is sitting at about $1,800. That would be your stop loss. Next take profit would indeed be around these EMAs / the higher end of upside resistance, 28.20 down about 25 would be the location that you would be targeting for some of those swing trade longs. So decent risk reward on those, but crypto is still obviously very volatile and well out of favor. Now, that's it for our overall market recap. Let's move into some of our big tech names. All right, so good old Apple right now. Apple down about 0.5% today, but the chart doesn't look too bad, right? Beautiful daily uptrend. They're just challenging the upside of resistance. What you would really want to see the bulls make an attempt to complete is the break above and then back test. That would present a really nice swing trade opportunity for some further longs if you're looking to take advantage of Apple's product release that they're coming into next week. Should be very interesting. They are also going for the newly established weekly uptrend and just continuation of this monthly gorgeous pattern right here, which is just the monthly extension here. Monthly was a cup and handle. The entries were 245, 250 for best entry. Apple's a nice carry trade if you're looking to get away from all the big tech capex spending and whatnot, I think Apple should do quite well over the course of this year. Maybe not some staggering outperformance, but definitely a very logical swing trade if we do get the breakout retest and then run. Long-term portfolio additions, not for me. I've mentioned that many times. The last time that it would be obvious to do was in the 250, 245, which we did highlight on the channel when it was occurring. As of right now, though, at 270, still a little bit rich. Moving on to AMD right now. AMD down 3.41%, just in sympathy with NVIDIA. Unfortunately, AMD still stuck in the gulag, right? 230 down to 215 is the big area of resistance. They have not been able to mount above and clear this one, so they're just now kind of stuck all the way down here. You guys know the drill. If you do fill the entire meta news, well, we're going to get some phenomenal opportunities to once again possibly add some AMD under 200 and also take advantage of the volatility to sell some put options in the lower 180 to 175, which is the bigger area of support that we're kind of clawing back into on the monthly time frame. Beautiful monthly 12 EMA all the way down there. The thesis on AMD is still very much intact. I know some of you guys may be getting a little impatient on AMD after 4 months of consolidation, but just keep in mind the thesis is still very much alive, right? The big growth for AMD comes second half of this year and then persists through 2028 and 2029. So you're going to kind of just have to hold firm if that is your thesis. Valuation remains very fair here below 210. Moving on to Amazon right now. Amazon down 1.29 in cohorts with the rest of the big tech trade today. Still trying to establish a nice daily uptrend into our resistance range, 216 down to 205. So we're trying to turn around the short-term time frames, you know, one at a time here, daily, and then we'll have to look for a better weekly move, claim the resistance range, back test, and run if you really want to see the end of this leg of monthly consolidation. Month of February is finished tomorrow. Beautiful back test here of the 26 EMA on the monthly. Still a very nice area, guys. I mean, I'm a big fan of leaps on Amazon in this location or adding shares to my long-term portfolio. Valuations very fair. Business is performing exceptionally well. So carrying this trade into the next few quarters, next few years, I do think is an advantageous proposition. Moving on to Google. Google down about 1.88% as well. Still no action here on Google, right? They're trying their best to put in a nice move, reverse, put it higher low, and make that trend change. If they can't do it, though, because these EMAs are just too strong and we just need more consolidation, you guys know the drill. We've talked about this many times, right? You may just be heading down to your weekly 26 EMA, which would consequently be the last area of brief consolidation. It's not a big one, but it's the closest one that you have towards those swing trade lows. And on the monthly, that would be synonymous with coming back and touching this monthly 12 EMA, which would be the next tradable opportunity for Google, in my humble opinion. Up here, still kind of in between zones, in my opinion, and also for adding some to the long-term portfolio. I'm not going to do it because I already have a substantial Google position overall. The valuation, one could argue, is not that egregious. Under 330 right now, it's trading for about, I mean, at 307, just take off 7-8% from this value, from these multiples right here. So let's call it what, like a 26.5, 27 forward price to earnings, about a 1.8 peg. It's not too bad, but still, I would like to get a little bit more greedy and really wait for that 12 EMA back test, but that's just me. Moving on to Meta right now. Meta up about 0.5%. Meta is trying to go for the daily uptrend break. As you can see, many of the big tech names are trying to shift weeks-long daily downtrends, right? So that being said, watch for the break of 662. That would also be reclaiming all of the moving averages, both short, medium, and the 200-day EMA, which is this green line. If they do get that, 680 to about 706 is going to be the next area of resistance. Meta has just been consolidating. The chart is not the prettiest recently, I will admit that. They're trying to go for some awkward weekly trend change right here without too much follow through at the current time. However, we do know around 660, the valuation is very conducive to building some longs right now in the company. If you enjoy Meta stock, I'm not trying to push it on anybody. I'm just saying, if you're a fan of Meta or you've been looking to DCA, is it a good opportunity? Yeah, here through the lower 600s, as we keep saying, low 20s forward multiple, low peg ratio, all things look good, and the business will be doing just fine, in my opinion, over the next few years. Moving on to Microsoft right now. Microsoft down about up about 0.28%. Microsoft also with the attempt at the engulfing move. Daily downtrend, as you can see right here. Most recent leg of selling is this one right there, and now you got the nice engulfing move. Microsoft back above 400. So we will see, can they push a little bit higher and maybe reclaim this area of support? Or do they have to reset it within the area of support and go for the daily uptrend swing like that? But it's definitely looking decent, right? We know we had the bullish divergence right here, lower lows on the price, higher lows on the RSI. So maybe with large cap reversals that we could see shortly, Microsoft will be able to protect this lower area of support that they have done many times in the past. Microsoft is a nice confluence trade, right? It was the most weekly oversold that it has been since 2006. We showed that a lot recently as it was happening. It's also one of the rare moments in time where Microsoft tags the 200 weekly moving average. You can go back over the last 15 years, and usually it always has been a very good opportunity to add Microsoft at these levels, especially if the fundamentals are not broken, which of course they're not, and the valuation is also very supportive of some additions to some long-term portfolios. If you wanted to go for some swing trade longs, they are trying to put in a tradable bottom right now. Obviously, that tradable bottom will be 382 stop loss, and your next target would be the top end of the most recent weekly leg of selling, which would put you roughly about the 454 up to about 467 range. So there's some good risk to reward here on Microsoft's attempt to reclaim the timeframes over time. These swing trades are not just one-day swing trades, one-week swing trades. No, you're looking for the bigger move. You're looking for the recapture of the daily, weekly timeframes as well, and that does take some time, so keep that in mind. Moving on to Netflix. Netflix was up 2.29% intraday, and then in the after hours, another 9%. If you just put a line where they are right now at about 91.77, you'll see that Netflix has done a few key things with that move today. Number one, they've reclaimed the most recent area of resistance that we were trying to work our way through. We highlighted this as a nice trade yesterday with the rumors that they were going to go back on the deal, right? And that was a very nice attempt, a very nice opportunity, because you had some nice swing trade lows and they broke the structure, right? For like the past 4 months, guys, we had been under the 12 EMA with daily downtrends. Now you got a nice daily uptrend while cracking above the 12 EMA. So price action structure was changed. It was a nice attempt. Maybe some of you guys were able to take that over the course of the day today. And as a result, now you are rewarded for that thesis or that trade attempt, right? Stop loss would have been all the way down below here, right? So can't call it luck, right? They're all trade attempts with good risk to reward. Now you have your exit targets, right, which would be the higher portion of the 90s, which would be where all of most of your moving averages are sitting, and where your next big resistance area is lying right now. So beautiful move by Netflix. Hopefully that some of you guys are able to accumulate some longer term shares down here in the 80s and 70s. I know that I was. I'll remind you guys, now that we're up in the 90s, just add 10% of this valuation and you will see it's still quite fair. PEG will be probably around a 1.45 right now, and the price to earnings should be still a touch under 30, which is not too bad, but definitely the best time to add Netflix, as we were saying for the past month and a half, was like low 80s through mid 70s while we were pending those deal negotiations. Moving on to NVIDIA right now. NVIDIA down about 5%, but once again coming back into the magnet, the big old magnet that is this 185 down to about 178 region. You can just see how many times either the bulls or the bears have used this as either support or resistance. Now, once again, we will look to the bulls to play defense in this area here. However, with the volatility, with the size of the drop today, decent opportunity to be selling some put options down here, or just being on the lookout for a possibility to add a bit more shares. NVIDIA had phenomenal earnings. That's not the question here. You can say that there was a lot of options. There's a very large call wall here at 200. And when that is not achieved, or when you have some, let's just say, questionable price action, which brings us down, dealers possibly unwinding a lot of those hedges by selling off the shares that would have been hedged for all the call options that were built up. Well, you got some bit of a drawdown right now, but nothing fundamentally is wrong with this business. If anything, after today's sell-off with yesterday's earnings, the company is just significantly cheaper, right? We did the valuation yesterday at 195. It is still trading for low 20s forward multiples and a very low, almost 1 peg right now on NVIDIA. So I like this accumulation range. We've played this one a ton, and I think the company will do well over the 2026. Moving on to Tesla right now. Tesla down about 2.11%. So nothing really to report on Tesla. They're still playing back and forth here with the time frame. So what you really want to see is the daily uptrend re-expansion and crack above 232, and also crack above your 426 to about 418 resistance range that is staring at us in the face right now. The higher time frames, Tesla also has not recaptured yet. First, you need to get the daily uptrend going, right, which they're making an attempt at right now. You also need to get the weekly uptrend back too, since you have some large consolidation here. So get me above this range, reset the weekly, and only then can we say, all right, your monthly lows are possibly set into the 12 EMA down here into 405 to 385 support, and you may just be looking for the long side expansion. But Tesla being a large cap growth company, we know it's just been down with the pack. So maybe Tesla also needs the rising large caps lifts all ships trade to kind of come alive. Moving on now to Palantir. I think we're making good time in this video. Yes, we are. Or the hotel manager is not really going to like me. Moving on to Palantir right now. Palantir up about 1.3%. Palantir also in the same situation as a lot of companies on this list. Still trying to find their footing, trying to get the daily uptrend back. No daily uptrend, you cannot say that this is the bottom. Now, one can make an attempt, as we see more and more names recover here, that possibly these are indeed tradable bottoms, right? Triple bottom down here in the lower, let's call it 127, 126 range. Tradable bottom, right? If you're making an attempt that this is indeed your structure lows, well, and you're looking for the daily uptrend recapture here and progressive recapture of that time frame and a possible weekly upswing as well, doesn't mean that there can't just be a lower high printed and lower low, which is why you would trade this one with a stop loss, right? But any longs initiated right now, you can possibly see a nice little pocket around your 12 EMAs. Obviously, you have to keep in mind that they have to get through the whole 150 resistance area first, but could be a decent attempt for a reversal of the time frames, right? These swing trade lows that we're looking for are indeed just that. They're not day trades. They're not week-long trades or whatnot. No, if you're putting a stop loss down here, waiting for the trend recapture, you're waiting for this. And then consequently, you would still be in the trade because you're also waiting for this, going for the actual just monthly higher lows being set and looking for the recapture of Palantir. So this is the trade that you can carry for many, many weeks on end, arguably many months on end. And if you want to set trailing stops as you reclaim areas of support, that is possibly also a decision that you can make, right? Moving on to SOFI right now. SOFI down about 0.98%. SOFI trying its best to put in some action right here as well. But we know the bears have been fully in control. So similar to other names in this list, they got to get the daily uptrend back first, right? No daily uptrend. Bears are still in control of the short-term time frames. I don't make the rules. That's just price action for you, right? That being said, it's still a weekly downtrend. So is it a good idea to add SOFI down here? Yes, we've been very vocal about that. The only problem is that, as you can see from this line, the yellow line right here, we're in the middle of nowhere, right? Above is big resistance, 21 and 25, and below is a more tangible area of support, talking about 17, then about $14. So if we are adding SOFI here, either to a long-term portfolio or building a little bit of a position that we want to swing trade back into the highs, you have to be ready and open to DCAing down here into the actual level of support. If the bears go for the absolute full retracement and plunge you into weekly oversold conditions, which you haven't had in a long time. SOFI down here at 19, not a bad buy in my opinion. 0.96 on the PEG ratio and a 5.27 forward price to sales with very good revenue and very good EPS growth, but a lot of fintech guys has just not been doing too well recently, right? Moving on to Uber right now. Uber with the trend change. So pay attention to these trend changes, right? When you get the trend change, you have your confirmation and you get the tradable low. If you don't have the daily trend change, it is a aggressive, trade, meaning like a Palantir doesn't have the trend change yet, right? If you want to go and put a stop loss here, you're speculating that the bulls will be able to convert and not just get immediately rolled over, yeah? It doesn't mean that a stock like Uber can also get rolled over. It just means that at least when you have the confirmation, the probabilities of success of the trade go higher. It doesn't give you a 100% win rate. It's just a game of probabilities here, right? So now tradable lows are in. 69.83 would be a stop loss area. You are looking for the continuation of the daily uptrend, and consequently, you're looking for the weekly time frames to gain more and more against this most recent weekly lower high at 87.79, and as a result, you're looking for the swing long to persist possibly over the next few weeks, possibly over the next quarter as well, as Uber has now set some very nice monthly lows in motion. We'll see if they're able to protect that. This whole area has been very solid support. And overall, at the low 70s, guys, very fair valuation. So whether you're trying to trade Uber or whether you are looking to long-term invest in Uber, I think both have some very good ideas here. Moving on to TSM, last but not least, TSM 2.82% to the downside, taking advantage of the NVIDIA dip to just consolidate the timeframes a little bit into that good old daily 12 EMA. We'll see if they can protect it or not. This is a fake candle doji, by the way. The line in the sand level for the daily uptrend is 356. In the event you roll over and lose that, well, you guys know the drill. Daily downtrend and embarking into your weekly consolidation phase, which could see you come into the whole 341 area. That could be a really nice area for some confluence, for maybe some larger swing trade longs. As right now, if you're just trading the momentum on the daily time frame, right, it's tough to go in with a lot of size. But you can play trend continuation with some stop losses below here, as they've now just back tested the resistance range, and then you would possibly be going for expansion here into 395, 400. That's on the table as well. I like taking the bigger swings, as we've been discussing with the Ubers, all of those things that are looking for weekly lows to be set and looking for larger moves of expansion, but you can play this either way. If you're looking for accumulation for long-term portfolios, guys, such a solid company, but I'm pretty much full on TSM right now. Not that the valuation at 376 is that egregious. Just add 10% to this most recent valuation that we did. I'll redo it for you guys next week when we see each other, right? It's currently probably trading with extra 10%, about a 28 forward multiple, 28 and a half, and about a 1.5 peg, and about a 10 price to sale. So the valuation isn't egregious, but you cannot also say that it's super cheap, right? Can they get more expansion? Of course. Are they going to be a very popular name and a very strong name into the next few years? Of course. But if you trade like me, right, there's many ways to trade. I'm not saying mine's the best. I usually like to wait for the larger pullbacks here on these styles of names, as oftentimes when that does happen, you can get some really nice entries into the weekly 12 for some nice trend follow through. So that's everything I had for you guys for the overall list rundown. Hopefully you enjoyed. Now let's spend about I'm running tight on time, man. Spend about 10, I always say 5-10 minutes. It always turns out to be 30, but I promise you this time it will be 5 to 10. So let's get into the biggest gainers and losers of the day. Okay, so number one, obviously we have to tackle the elephant in the room on this list. So EOSE back to May highs and back to January highs. 39, almost 40% down after earnings, as the company once again was unable to issue adequate guidance, missing EPS by a wide margin, missing revenue by a wide margin. A lot of criticism on social media because the company reaffirmed guidance midway through the quarter, and this one has left a lot of people disappointed. Now, the reason I've never played EOSE directly, not that the technology is not good, not that they don't have a decent backlog, is because at $3 billion where it was before this whole drop, I mean, they weren't into the scale of the revenue just yet, right? Bulk of the revenue came into play 2027, 2028. It was a very popular name on social media. I went for FLNC instead because at $3 billion market cap, they're already in to their scale, right? Lithium ion batteries are already there and are presenting some good revenue for the company. So I went with FLNC. They were also not spared during their earnings, and I also have added a little bit more in these ranges right here. Between the two companies, I personally still think FLNC would be a better bet. You can always go for the market leader in ENS. In my opinion, I mean, people can say what they want about EOSE. The technology is still good, and it's very hard, right? When you're ramping new technology with a bunch of different suppliers, it's very hard to ramp it in an adequate fashion. We also know that some of these battery plays have very lumpy sales pipelines as they're waiting for delivery timelines for these various data centers. We know that the data centers are not built instantaneously, right? So not only are they beholden to timelines of their own suppliers for this new technology, but they're also beholden to upstream, right? In terms of just their deliverables. Are the data center partners that they're in relations with, are the data centers actually ready to accept these deliveries? So a lot of noise going on between in EOSE, but if you're looking for an initial entry opportunity to take a thesis or take a multi-year thesis on this technology, right? Because it's longer duration battery cycles, which is what everybody needs right now. Now, not a bad entry, but once again, these are in the speculative, low revenue into scaling revenue companies. So it will require a couple years, in my opinion, for this thesis to really take root and take foot, and to where you can actually say, okay, the company's actually executing. Maybe not years, but maybe at least another a good next 2-3 quarters to really get a sense of whether or not this company is able to scale this technology and really able to, augment the backlog, right? If there's true demand for it. Moving on to New Holdings. New Holdings, arguably one of my favorite companies in Latin America right now. They reported very good earnings, guys, but went down. It seems to be a common theme over the course of this quarter. They missed on EPS by a fraction of a penny. They beat on revenue by 7.21%. Still, however, the stock did come down, right? That being said, looking for a nice backtest area, 15 to 14.5 is your previous all-time high range of resistance, but it could come all the way down into the more fat area down here into the 26-month EMA. This is the pocket that I would be looking for in terms of accumulating some new holdings. 15 and about 13 is level that I'll be playing with some short puts, but also if I wanted to build a share position, that's probably indeed where I would start. Now, some of these other names today were down a lot because of NVIDIA earnings. I mean, you can take a look at here at Credo. Credo obviously losing these range lows right now. We take a look at Celestica as well. Celestica was down too, also challenged in the end part of their support range. Other names like GLW, right? The photonics names, this glass obviously and photonics, or whether you're looking at a name like AAOI or Light. right? These are all coming down. Just pay attention, guys. A lot of this momentum is to be watched on the daily 12 EMA chart. So if you're looking for pullback areas for some swing trade momentum longs, just pay attention to them. We talked a lot about these names in the past few videos, so I'm not going to spend 10 minutes talking about them today, but a lot of these are looking like the same setups, right? Whether it's those names, whether it's the semiconductor equipment manufacturers like AMAT or LRCX, or names like ASML as well, they're all kind of establishing the similar patterns to where they never really haven't lost in recent memory these daily moving averages, but I'm a big fan, guys, of the weekly 12 EMA. So I'll be paying attention to the weekly 12 EMAs. If we can get some pullbacks into them, because this momentum, weakness in semiconductors could perhaps persist for longer than just one single day, it's decent. One of the trades that I'm looking heavily at right now is Bloom Energy, because the pattern is gorgeous right now, in my humble opinion. After a very long period of accumulation, you had the daily uptrend breakout. You can see here they pulled back 7% into your prior highs, into that 12 EMA, looking great for a good old breakout, retest, and possibly run on Bloom Energy, looking very solid there. And if ever it does not play out, well, you also got all of this area of support here to kind of rebuild those positions. So essentially what I'm saying is that there's something for everybody on this trade, whether you're looking just for sheer momentum, stop losses right there, or whether you're looking to accumulate some positions on Bloom to carry for the next few quarters. Decent area down here, guys. This whole 147 down to 130. I know it's not 80, but you can't fault me. We've talked about this one many times when it was at 80 as being a nice opportunity. This would be a re-entry zone right now for any larger positions that you wanted to build in this company over the near-term future, right? Moving on to other companies like the energy trade, NextEra Energy. Pay attention, guys. Beautiful chart right now. If you do pull back here into the low, or not low, but mid 80s, 86, 85, 84, phenomenal re-entry on this big breakout right there, right? So beautiful, beautiful, beautiful chart. I'll be looking for re-entry right about there. And one that's kind of ready right now is Vistra. This one's been trailing a little bit, but beautiful, beautiful, beautiful engulfing move right now. And looking for, you call it a breakout retest, call it a cup and handle, whatever you want to call it, looking great. Recapturing all the moving averages at once. Big support area below 173 to 157 recaptured, looking for the expansion. So pay attention to Vistra. This energy trade is going to be very, very interesting here over the next few days and over the next few weeks as well. So please keep that in mind. Is there anything else here? Oh, PayPal. Unfortunately, Stripe came out today and said, no, we're actually not in talks of, we're possibly not in talks with Stripe. But then today, they came out today saying they prompt concerns amongst executives. The company is preparing for a possible activist campaign or takeover bid, but not from Stripe. Stripe came out today and said, no, unfortunately, we're not interested. So PayPal, once again, just probably maybe will have to consolidate a little bit more, but we'll see. The stock has gone absolutely crushed recently, obviously after missing their earnings and guiding for negative EPS, right? That's not too good. To the upside here today, you got several recoveries in your smaller cap software names, as most of the software sector had a very nice day today. If you take a look at, well, just the heat map right here, you'll see, look at all these recoveries, right? Decent day for a lot of the software names. FICO, Paychecks down here, a lot of the cybersecurity names as well. Most of software was up, indeed higher today. So nice little pumps right now, getting some nice little reversal trades from IGV. So IGV, in my opinion, is still a nice mean reversion trade. Not a fan of investing in some of these companies for the long term. I think there's more exciting opportunities right now, especially in the AI space, in the bottlenecks that we talked about all throughout the rest of this week, right? But IGV, I do have some swing trades in terms of some calls for a bit of a mean reversion trade. So we will see if today sparks a bit of a recovery rally, but you can see, right, a lot of even the smaller mid-cap ones, PGY, Shop, I'm just looking at names on my list, right? A lot of cybersecurity names, CIBR as well. We talked about it yesterday. CIBR is an area of SaaS that's been sold off recently that I do believe has a very still very good upside into the future, right? So, whether you want to play these individually in terms of recoveries from CrowdStrike or Palo Alto Networks or things like that, or you just wanted to take it all as an ETF under CIBR. CIBR is very interesting for slightly out of the money leaps, not financial advice, but if I were looking to take a trade on this, I'd probably do slightly out of the money leaps, put a lot of time on them, and then just make a bit of a mean reversion trade to the upside on cybersecurity. Unfortunately, a lot of these ETFs only have August expirations, so not that much time, not like a year plus. For a year plus, you got to go for individual names. My favorite ones from these current levels are CrowdStrike and Palo Alto. They are the biggest, and they probably stand to recover in the more smooth fashion. Shopify was up. We talked about this one a lot. Phenomenal buying opportunity on Shopify for the last few weeks, and so many other names were up higher as part of the software trade today. AppLovin getting a lot of interest here off the lows. Daily uptrend, same thing. Tradable bottom is now set. We were saying it was a nice opportunity if you're looking for AppLovin to be in back there. Affirm also, right? Some of the buy now, pay later names getting some lift. So nice recovery in software all across the board today. So pay attention if this rotation does last. Maybe you get a couple days of semiconductors just being unfavorable, and then they kind of print some of the highs back on software, kind of putting the semiconductor trade a bit underwater. There's a lot of people, guys. The long semis, short software was a very popular trade. When you get big dispersion like this, big drawdowns on semiconductors, and then big upside on software at once, puts a lot of pressure on that long short trade. So possibly a lot of people getting squeezed on that trade right now. We will see if that does last, but that was definitely something that was notable to us today. We will see if that does, if that does persist. Lemonade also moving higher. UiPath, which got destroyed, also moving higher. Zeta also moving higher. So pay attention to these, right? Maybe a bit of a shift of momentum and just unwinding that long short, and maybe now the market can normalize into a bit more healthy rotation rather than just being lopsided, right? So maybe we can get a bit more breadth of participation within tech, as tech has been really diverging within itself recently. Now, that's everything that I had for you guys today. Hopefully you guys enjoyed. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel as well. I would love to have you back if you enjoy these videos. And last but not least, if you have any questions, comments, and if you guys are looking at certain plays, leave them down below in the comment section. I'll be spending a couple, not hours, it's not gonna take me hours, but I'll be spending a lot of time today answering all the comments that I haven't had time to catch up on. Thank you so much for your participation on the channel. You guys make it all worthwhile. I will not see you guys until next week. Again, changing cities right now, going into the deep neck of the woods in Cambodia, right along the border, and gonna go explore what used to be, right, some of the portions of the Ho Chi Minh Trail that the U.S. bombed a lot in the 1970s and whatnot. So I'm going to go explore that, and there's obviously a lot of landmine removal in process right now. So I'm going to go explore that whole part of the history of the country. If you guys know, very interesting stuff, and you guys know me by now. I'm a history nut. It's one of my side quest passions, right? So that's what I'll be doing, which is why I'll be in a section of the country that's notorious for not having the best internet connections, as you know, it's there's a lot of jungle over there, right? So can't guarantee that there will be a Sunday video. I'll try my best, but in the event that there isn't, I'll see you guys probably on Monday when I'll be back into a larger city, essentially. So that's it for me, guys. Take care. Pleasure as always. Peace. Have a good weekend.